welcome. You're watching Diwali special with me, Geetu Moza. What does Samvat 2079 have in store for Indian equity markets? Which sectors look investment worthy? Which stocks could fetch you handsome returns? To talk on this, joining me now is Mr. Pankaj Pandey, Head Research, ICICI Direct. Great to have you, Pankaj, on this special day. And let me tell our viewers that this Diwali, Pankaj has selected some of the promising stocks as Diwali Muhurat picks. So let's start.
Yeah, thank you, Gitu. I wish all the viewers a very happy and prosperous Diwali and happy New Year ahead.
Thank you so much, Pankaj, and we wish you and your team also a very happy Diwali and a very prosperous New Year to all of you. We tell my viewers that this Diwali, Pankaj has selected some of the promising stocks as Diwali Muhurat picks. So let's start. Pankaj, last somewhat market faced multiple global and local headwinds, fears of lockdown from third COVID wave, liquidity withdrawal from central banks, rising interest rates, inflation at record highs globally. But still, our Indian markets beautifully digested all the bad news and we have outperformed the global markets clearly. So, how do you expect a new Samvat of 2079 to be for the equity markets?
Absolutely, Gitu. I think since last year, Diwali, our markets are down about 5.5%. And when you look at emerging markets, they are down about 32%. A developed market like US is also down about 18 odd percent, and most of the other markets are down in good double digits. So from that perspective, we have been a clear outperformer. Our markets have been quite resilient, and this is happening despite the fact that since last Diwali till now, we have seen FI outflows of $26 billion, which is huge.
Right. Yeah.
So from that perspective, I think Indian markets are clearly sort of standing out. Our sense is that historically, when you see last 2 3 years, earnings have or Nifty EPS has been hovering around 450 to 500 till 2021. In 22, we had seen a good delta or good jump to 720 rupees. Now from
Right.
there on, we are expecting about 13-14% kind of a growth. So for next 1 year, our sense is that our Nifty target is 19,425, which is about 11-12% upside.
Mhm.
And mind you, it's a very conservative target what we are sort of keeping, given the fact that globally you are seeing still good amount of volatility. So
Yes.
obviously, it can't be expected that India will remain always resilient to that extent. So obviously, some volatility will also sort of seep in. But having
Mhm.
said that, our sense is that Nifty is headed for new high. My personal belief would be that it would be making a new high this year. Next year looks like more certain that it is going to make a new high.
Mhm.
Now, coming to sectors, since the global volatility is so high, we are living in a VUCA world, it's volatile, uncertain world. So the focus ideally should be more on domestic oriented sectors. So
Okay.
our bias clearly in our Muhurat picks is towards domestic oriented sectors. It is banks, it is autos, logistics,
Mhm.
healthcare. I think what we are looking only from the global perspective is IT stocks because these stocks have corrected 25 to 50%. So if
Mhm.
global macros become better, considering the kind of reversal what we have seen recently, though it's not a definitive trend, then our sense is that IT is also another sector which should do well because sectorally, when you sort of look at last 1 year, what has happened is that when Nifty is down about 5.5%, we have seen FMCG sort of doing the best, up about 12%, whereas
Right.
IT is down about 20%. A lot of other sectors are sort of down. So from that
Mhm.
perspective, I think the focus should be clearly on domestic oriented sectors.
Mhm. So we are targeting 19,000 plus levels for Nifty, as Pankaj said. And Pankaj, you also talk about sectors like banks, auto, pharma, consumption, logistic, IT that you like the most. Now, please be stock specific and tell us which stocks to pick from each of these sectors.
So what we are recommending, for example, in banks is Axis Bank and City Union Bank. Now in Axis Bank, we have a target price of 970, City Union Bank
Mhm.
215. Axis Bank had been sort of lagging in terms of growth compared to peers, but last few quarters they've sort of picked up. I think asset quality concerns across bank is not there, so that is not a major concern. And then
Mm-hmm.
their Axis Bank is focusing on unsecured portfolio, which is a high yielding book. So our sense is that their spreads will be better, their ROEs and ROAs will be better, and which is
Mm-hmm.
why it will get sort of related. And banking in general is a good proxy for overall economic consumption. If you don't understand a particular sector, then I think banking is one of the better sectors to lap into. I think City Union
Right.
Bank, from a similar perspective, because here our target price of 215. So this
Mm-hmm.
is one bank which has grown at say 10% historically. Management is guiding for 15 to 18% kind of a growth. So I think
Mm-hmm.
banking is one sector which is clearly looking a lot more better. And given the fact that banking has got a very good weightage, our sense is that banking is going to contribute a lot towards Nifty making new highs.
Okay. And now we have Axis Bank and City Union Bank from the banking space. What do you like among the auto stocks that are listed?
So in auto, clearly what segment that is sort of doing well is four-wheelers, commercial vehicles, and premium two-wheelers. So
Mm-hmm.
from that perspective, I think when you look at these are the segments where you are the expectation is that you will see double-digit growth. So Eicher Motors is clearly one company which is looking a lot more better in the premium two-wheeler space. So last year they sold about 5.2 lakh vehicles. Now what they have
Mm-hmm.
introduced a product called Hunter, and as a result of that, people who are looking to upgrade from 125cc and segment above can look at
Okay.
this particular bike. So suddenly they have expanded their market horizon to about 30 lakh units, and which
Mm-hmm.
is why we feel that their numbers can sort of simply sort of can grow multifold or can grow quite well from current levels, and which
Okay.
is why we like this stock. And plus, it's a play on CV also because they hold about 54% in Volvo.
Mm-hmm.
So from that perspective, this is one company which we like. I think tire is also a good proxy for overall PV plus CV cycles. Apollo Tire, largely 78% of their revenues is coming from both these segments. And
Mm-hmm.
it's a good proxy for even capex also. So our sense is that this is one company which will benefit not only from top line growth, but since the raw material prices have also corrected,
Mm-hmm.
especially crude and rubber, so the margins are also expected to expand. So I think which is why auto is one of the better sectors from a discretionary perspective to be looked at.
Mhm. If we look at the pharma sector, Pankaj, pharma is always thought to be a defensive sector, but this time pharma did not play out that well in last, if we talk about Samvat 2078. So, since you said that your focus will clearly be on the domestic consumption story, is that the case with pharma companies also? Have you selected the companies which are more domestic focused?
So in pharma, we have selected two companies. One is the hospital chains, which is Healthcare Global. So
Mhm.
here, our sense is that largely when we see that overall the elective surgeries are going up, then what we are also witnessing as a trend for overall is that the international patients are sort of coming up. So
Mhm.
domestically, if you look at the footfalls is above pre-COVID, it is the international patients where the footfall is say about 90 odd percent. So
Mhm.
our sense is that going forward, this will sort of normalize, and as a result of that, you will see better RPOPs, better occupancy rate for a company, even for a company called HCG, which is into cancer care. Because our
Mhm.
sense is that the number of cases for cancer is going to sort of structurally go up. So this company is sort of very, very well positioned. And then they are
Okay.
also taking debt reduction exercises that should benefit. And recent deals have been far more higher. So when you look
Mhm.
at recent deals, both in the listed and private space, that's in the range of 22 times EV by EBITDA, and this company is
Mhm.
trading at 12 times. So, which is why this company. We like CRAMS as an opportunity. This has sort of really not played out, but our sense is that this can become a lot more brighter if you see the challenges what European companies are also facing with
Okay.
respect to China. So
Mhm.
CRAMS is one space which we are liking, and we like Laurus Labs a lot from that perspective. They're doing a capex
Mhm.
of 2,000 crores. Half of
Mhm.
that capex is going to go towards that segment. So, and their contribution will sort of increase from 22% to 35%. So, which is a
Mhm.
significant increase. It's a high margin, high growth business,
Mhm.
and which is why we like this company where the target price is 675.
Mhm. Mhm. Let's now talk about three more sectors that you like the most: consumption, logistics, and IT. So, which are your top bets in this space?
So consumption, when we sort of look at when you look at the initial commentary from most of the companies, so Navratri sales, the sales are higher by 15-20%. Largely, the expectation is that you'll continue to see higher sales growth even in the month of Diwali. Then, since the raw material prices have started to cool off, so you'll see margin improvement also sort of coming into play.
Mhm.
And from that overall consumption perspective, Havells is one company which we are liking because this company has been growing far more better than the rest of the competition. And
Mhm.
since raw material prices have corrected, so you'll see margins sort of getting normalized for this company going forward. So consumption is one thing which we are clearly bullish upon. And I think another consumption item is the hotels as an entire space. I mean, this space is clearly sort of doing exceptionally well first half, or when you look at Q1 and Q2, largely the occupancies are quite high compared to what you see pre-COVID levels. So best is
Right.
yet to come because H2 is a lot more important to them, and that is when you see international tourist arrivals also. And I think in the month
Mhm.
of October, we have seen the highest air travelers also in India. So all this is pointing towards a pretty healthy occupancy rate of in excess of 70% across.
Okay.
And this company is largely present in most of the market. So I think hotels as an entire space is looking very attractive. We have highlighted
Mhm.
Lemon Tree for this particular, but not to say that we like most of the players in this segment.
Mhm. Mhm. Logistics and IT, your top bets.
So in IT, up till now, when you sort of see the results, most of the companies have come out with pretty good, decent set of numbers. So constant currency growth is say 4.5% to 7 odd percent. There's margin expansion from say 10, 20 bips to 100 bips for most of the companies. TCVs are largely intact, so you don't see overall deterioration. So what we like is largely a company called Coforge. So from that perspective, here our target price is 4375. This is one company which is saying that they are going to grow bare minimum at 20%. They have got the least attrition in the industry, so which is why this company. And logistics, so we like Concor for multiple reasons. One, we feel that after so many delays, probably this year, next year, you will see divestment of this company sort of happening.
Mhm.
So that can sort of provide a leg up. The other thing is that the government has recently come up with a national logistic policy, and wherein they are looking at the share from overall freight from road to rail is going to go up, and this company has got 75% market share there, and they're doing
Okay.
a phenomenal kind of a capex there. So I think
Mhm.
this company will be the biggest beneficiary from the rolling out of the national logistic policy, and which is
Mhm.
why Concor looks very attractive to us with a target price of 890.
So let me list the stocks that Pankaj likes the most for the Samvat 2079. It's Axis Bank, City Union Bank, Eicher Motors, Apollo Tyres, Healthcare Global, Laurus Lab, Havells, Lemon Tree, Concor, and Coforge. Thank you so much, Pankaj, for your time, for sharing these promising stocks as Diwali Muhurat picks. Wishing you and your family, your entire ICICI Direct team a very happy and prosperous Diwali.
Thank you so much. I wish all the viewers again a very happy Diwali and happy investing.
Investments in securities market are subject to market risks. Read all related documents carefully before investing.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from ICICI Direct.